Yo, good morning, everybody. Get started a little bit earlier today. Yeah, hopefully you guys have had a good week so far. Definitely did a lot of back and forth. Like this thing's just been sideways when it comes to the NASDAQ, but we'll see what happens. Just get some stuff ready real quick. See, I don't have too crazy of like high expectations today. Good morning, Fotis. Good morning, everybody. Right? But my expectations are very limited today. I'm not necessarily having too much faith in what's happening right now. We're kind of just stuck, right? If we go to the bonds and yields, we could see the bonds and yields, they're doing the same thing. So something to keep in mind when the bonds and yields are sideways, or if you just simply see that the dollar, bonds and yields, and the indices are just not really moving. Like if sometimes they all do it together, sometimes one will be moving and the other one won't be. So whenever you see these types of conditions, you got to just automatically think, okay, well, this is a more tricky condition for me to even engage. So the risk is elevated. Okay, we do have news at 5:30, so in about 15 minutes. So we'll see what happens. We haven't really had a big jump, right? So it hasn't really done much. So let's just kind of get a lay of the land real quick. Good morning, Jen. It's definitely another beautiful day. Can you guys hear everything okay? See everything okay? Just let me know in the chat. Just want to make sure real quick. So yeah, I still believe that we're going to target up here. I still believe at some point we'll get up there. Clearly, we're in a holding pattern right now. We built up even more liquidity. Go to the 2-day chart. We still have our bullish order block. Okay. So again, when we're considering bias and narrative, this is extremely important, what I'm going to tell you right now, okay? So when we're trading or identifying a bias or a like narrative, right? Like the main story of what's happening. When we determine a direction, we got to use our validation principles to help us stay in line with that higher time frame direction. So if we're bullish like this, we're not going to be thinking because it's stalling for a little while, the price is not going to want to get up there. At some point, it, in my opinion, is going to get up there, right? Even if it's just to get up there, sweep this, and then start to tank, if that's what they decide to do. But when you have your narrative being identified on the higher time frame, it is mandatory that you do not think the narrative is going to change on a daily basis. The narrative where the larger waves are pushing us requires a lot to be turned off. So that's one of the perks in the style of analysis we do from the higher time frame. we don't flip-flop back and forth. Okay, if we have a bias, well, if we have a narrative, because narrative and bias are different, right? Bias can be like a consolidation in a bullish trend, a retracement in a bullish trend, part of the continuation in a bullish trend. Same thing's true if it's bearish. So you can have like bearish days in a bullish narrative. but the narrative needs to be understood, because if you can solidify yourself on the proper narrative from the higher time frame, you have directional interest nailed down for quite a long time. And just like how in the lower time frames we need 3 PD arrays to be violated for us to, consider that the move's not necessarily the greatest move, same thing's true on this. So in order for me to be sincerely bearish and get away from the likelihood of this thing going higher, I would like to see 3 PD arrays get violated. We have a bullish order block, we have the gap in here, and then we have this accumulation area. So if this was to get through this lower portion here, okay, that would make me very confident the price is probably going to keep going lower. And then what's below us? This gap, this low, relative equal lows, and then, whatever else is deeper down here, like this gap or whatever, right? But as long as we stay above these levels here, any shorts, if they do get offered, maybe they come to take some of the trend line liquidity. Okay, that's great. On the higher time frame daily chart, though, again, we're gonna require a lot to change the sentiment, right? So it's a very important topic, very important distinction that most people forget about or never even really learn, and they flip-flop back and forth every single day, and it's kind of a tragedy, right? So it's just less stressful, because you go from having to have a scientific reason to buy or sell every single day to, okay, this is what it is on the higher time frame. I'm going to stick to that until 3 PD arrays are violated in the opposite direction. And I'm just going to keep hammering that. And anything that goes against it, I'm going to look at it as counter trend. I'm going to lower my risk. And then I'm going to continue to monitor PD arrays that displace back in line with the buy side delivery. And then changes in state of delivery, I'm going to be identifying 15-minute, 1-hour changes in state. After a retracement, that's what we'd like to look for. So if it comes down, like, for instance, it goes down like this, we want to see some change in state. And then once it does that, you can rest assured that we're now likely to be back in line in terms of timing on the higher time frame. Okay, very simplistic stuff, I hope. Again, this stuff doesn't have to be rocket science every single 5 minutes. I mean, obviously there's complexities and whatnot. You don't want to be too simple, but it's just kind of the way it is, right? So when we're looking at the dollar here, why do I have a daily bearish order block? Go. So yeah, we got this inversion in here. Okay, what I do like, again, this is potentially a sell model, right? Higher, lower. So what I do see is the trend line liquidity here. And then another thing, obviously, we see these equal lows down here. This whole move here, this is a piece of it, which obviously has the market maker model tendencies to the sell side. But this whole entire thing can end up becoming a market maker sell model. Like if this was to end up below this area, right? This could be accumulation, right, in a larger market maker sell model. So that last down candle, if price gets below it, we wouldn't want to see this down close candle get traded through again to the upside. We also have an inversion fair value gap here. We have one here. And again, like I just showed on the daily chart, we have the fair value gap. So when we're looking at price in here, we've already broke down, right? Change state of delivery, shifted market structure, change in state of delivery happened there. And there's a rejection block there for the dollar. So that rejection block, we got 10 minutes until the first news comes out. I'm pretty much going to wait. I would really like to see 630 come in, so the open price. Just given how back and forth it's been, we'll obviously see right out the gate what they want to do. They're dropping a little bit right now in the NASDAQ. But again, when we look at these higher time frames, what is it showing us? We have equal highs. We're setting up equal highs. What is retail thinking? Those are strong resistance levels. It should not go higher. That's what they're thinking. You know, we'll see if they're correct. But I assume, I mean, price could, I got to give it a little bit of leeway, right? Like price could come down, wipe out some of this trend line liquidity. And again, as long as this level here does not get violated, I will still allow for life to the buy side to be present. Okay. I really want those highs to be taken. I'm sure a lot of people do. Came off the lows here. We outlined the SMT before it rallied up. Came deeper down into our target. So again, with this being the case, if this was to continue to drop, it supports buy side. So targeting this, we have buy side to sell side. So at this low, we've already tagged below it. So if it's going to be bearish, take this high, most recent swing high, to the most recent swing low. We have equilibrium right there. That's also inside of a bearish breaker. So let's actually make that a little bit smaller. Okay. So we got this thing dropping pretty aggressively. So now we're kind of just stuck. So we got to wait, right? We have accumulation. If we are going to look to go lower, I'd like to see accumulation, manipulation, distribution. So we already got the accumulation. Are we going to get manipulation? Maybe it tags this, which is a daily bearish order block, a daily breaker. That's a weekly order block, actually. Change that label. Okay. We're going to get accumulation, manipulation into this PD array, and then distribution, because again, we got buy side, failure swing, sell side. So buy side, sell side. This should be a balanced price delivery from the low down here to the high. We got equilibrium right in the middle relative to the BPR. Lines pretty perfectly with the weekly order block and the daily bearish breaker, if we can get up there. It may not need to get up there though, because if we take the drawings off, pay close attention to the price delivery in here, what do you see? Right? We see buy side delivery, rejection block, price respected that, displacement creating a bearish breaker. Well, what's a bearish breaker? In itself, it should act as a BPR if you're going to be correct in this case to go lower. So when it comes back into it, it should be sensitive from the low to the high extreme of the breaker. Equilibrium is right there. We don't want to see it go beyond that. Preferably we stay in the lower 25%. One thing as well, you see displacement here that closes below this low. So with that being the case, that is a piece of balanced price delivery. This imbalance coupled with the run below the low, whenever you see that, this is something ICT talks about. When you have that displacement that closes below a low that it's taking out, and it's not just like a wick, this right here is a sign of continuation, right? This is a balanced price range. Why? Because you got buy side, sell side delivery. And it aggressively blew through it. And we have very easy low-hanging fruit targets if we are to do so. right? And just keep going lower. We're also in a phase of accumulation. So accumulation, if we can get manipulation, I don't want to see it fill this entirely in. If it does, say it goes like this, it respects this order block here, the bullish one. Like, look at those lows. I like these lows. Okay. So this could be accumulation, manipulation, distribution. I'd like that to take out these lows. We definitely got to watch what the reaction will be from here. But if this was to hold this level in here, let's say price drops down, takes the lows, and then rallies, or like I said, stays above this, and then we end up inverting this fair value gap, we would have to see that reaction in there. And if it was to open up another candle and then do something like this, okay. So if we were to get something like this, obviously it'd be a smaller candle, but if we could see something like this, and then the next candle after displacing or closing above this, price ends up showing us wick rejection from that level, and we can get beyond the midpoint of this, we look at this as a buy model. And then we just simply look to target the highs, and we get second stage distribution up here. Sure, if we go to the lower time frame, we could see there's an accumulation level right there, accumulation here. So if this ends up above this high here, whoops. So yeah, if this high and this accumulation, this high and this accumulation ends up being traded through aggressively, and price returns into it, does something like this, but in this level, and then eventually it gets above the fair value gap, and then it comes down and then does this on the higher time frame levels, and then we get up above this. Each of these levels is a gripping point. If price is going to go higher, when it breaches them and it comes down into them, they should be able to hold and start to show support with the highs up here looking to be targeted. Right? For now, obviously, given what we see so far, we have to assume the price is now going to look to try to target these equal lows here. It just makes sense. It's super obvious. We got a market maker sell model. We had a market maker sell model in here. See the accumulation, right? It's 1, 2, 3 accumulations, and then smart money reversal. Price then breaks down through the accumulation, returns into it, treats it as a balanced price range that's inverted, like a bearish PD array. We got balanced price range here. Why is it balanced? We got buy side, sell side delivery overlapping one another, and we're breaking a low and a previous accumulation. Okay. So price came back into it, measure out the high to the low, or get that last down candle. And then it was off to the races, right? So yeah, give me 1 second. Let me know in the chat if that makes sense, what I just talked about. Highly valuable stuff I'm sharing with you right now, as always. So yeah, just give me a 1 in the chat if it makes sense. If you have questions, let me know too. Damn, there's a lot of stuff happening. U.S. producers. Oh yeah, the news just came out. Whoops. Still just barely getting over being sick. I still feel it lingering. It's so annoying. Damn, that was a wild piece of price delivery in there, huh? Yeah, I hope what I just described for the dollar makes sense, because that's going to be my objective. So we'll see if the dollar can respect these levels and then set up a scenario that I just mentioned. Continuation to the downside is what I want for the dollar. I want those equal lows. And I think we're going to be able to get it, if I'm being honest. So yeah, that's a pretty nasty delivery in there. So big run higher. We had a little market maker sell model. Accumulation right here, drag to the right, treat it as distribution. Bearish breaker. Came down, tried to hug the low, but again, there's accumulation to distribution there. And then it targeted the lows. The red boxes here you see are new day opening gaps. So these are, again, gripping points. If I was bearish, I'm looking at these when they get traded through as either targets or gripping points to keep pushing price lower. Because these gaps are very, very significant. They're very, very important. And that's why this indicator is so important, especially for new traders. Yeah, look at the dollar. So we'll see how this wants to behave in here. Again, we're potentially in a situation where it's accumulating. We may manipulate higher a little bit, but eventually we want to see it go lower. See that stutter candle in there? Consecutive down movements. When price gets above it, that's a change in state of delivery. Early sign is when this candle got taken out. With a narrative in play that you can identify, you can use the early changes in state. But you got to know what you're looking at. You got to know what you're aiming at. What should happen. Right? Or what's likely to happen, I guess you could say. So yeah, that looks pretty obvious. You see this right here? Yeah, they're not going to leave that. Crazy to think that they're going to leave that. So yeah, I'm definitely interested in seeing if they can run it up there. That's what I'd like to see right now. So again, hopefully you guys have had a good week so far. Hope you enjoyed the experience this week. Stuff that we do literally every single day. So I'm sure that a lot of things that I talk about, unfortunately, is going to go over most people's heads. It's just simply because they're at a particular level in their journey, where some stuff that I talk about, you just don't know where it fits or how to put it together. But hopefully you're getting better at seeing what goes together when. You're starting to see the importance of these different things that I mentioned. Power 3, market maker models. That's the core of everything that you do. How we read order flow, right? How we target liquidity. I mean, all this stuff is put on a silver platter for you to understand. Plus, you guys get, the experience with me navigating it live for you. So I'm actually running to the bathroom real quick. Give me 1 second, okay? All right, y'all, I'm back. So yeah, what's up, Emmanuel? So hopefully everything's made sense. Like I said, I already got the lay of the land. I already know what we're looking for. I already know what I want to see. So I like these equal highs up here. It's too smooth. Took stops. I like those highs up there. We got the candle right there. It's a bullish order block. Can actually do this too. We got a bullish breaker as well. It's obviously a 2-minute chart. It's pretty early. So all the news has done up to this point was rally up into this level. So we'll see what it wants to do. Again, we're in a holding pattern, so your expectation has to be managed, right? I'm going to be very dependent on macros. Look at the average daily range, how it's changed. We were going from 800, 900, 700, 600, over 1,000. Now the whole entire week we had 400, 400, 266, 300, 376. So the average has slowed down pretty dramatically by about half. And look at what's happened, right? It's sideways. So if you look at the currencies, wanted to see if we can get up here. It's kind of pulling back a little bit. Didn't want to see this get taken out. So yeah, I guess this is a good instance where the analysis wasn't perfect. So the trendline liquidity was nice. Rallied up, broke down. It actually has a bearish breaker in here. So that's interesting. We've closed now below that inversion. So it's now created an inversion. Didn't create it up until this candle closed below. So we may get a little bit more of an attempt to try to get lower. So we'll see what it wants to do with the currencies. Again, do you guys have any questions? Just let me know in the chat. Still ahead of the open. Most of my engagements are going to be after the open. All of them, actually. So we're just going to have to wait and see. Overall, I would like to see it get up here, but if we break down, say, through this low, is that multiple PD arrays being violated that should have held up as we look to keep going up? I would say so. If this ends up below this low, that's a problem. And then we got this order block. If it closes below that order block, then we got the low. We got the gaps down here. So again, manage your expectations today. Yo, good morning, Tony. I appreciate you saying that. So yeah, we'll see what happens. Still got this fair value gap here. So again, as long as it stays above this, again, if it breaks this low here, or this low, in particular this low, that's multiple PD arrays, right? We got a swing low here. We have bullish order block. We have a fair value gap in here, I think on that lower time frame. We have this bigger inversion fair value gap on the 16-hour. We actually have this whole range in here too. Okay. Definitely got to keep tabs on this. Yeah, it's a daily. Again, when we take a look at this from a larger view, I mean, look at what's happening with the candles. When you see this, many of you that have been with me for a while know when we're talking about like low probability, high probability, low resistance, high resistance. You know, one of the easiest ways to identify that you're in a very tricky environment is by going to the higher time frame and looking at the candles. How are they forming? Are they breaking away from each other nicely? Right? Or are they just stuck, going back and forth and overlapping one another? If they're overlapping one another and we're in consolidation, you got to lower your risk because we're in a low probability condition, most likely high resistance, right? It's just refusing to really go anywhere. So it's interesting how nothing has really happened with CPI announcement, right? I mean, it's given a little bit of a flurry, but really not much. So, I mean, they could hold the entire week just like this. So we'll see what happens. We'll see what they want to do. Take that off. So like I said, the dollar, would not be surprised if we get this to run up, tag that breaker a little bit, or try to get into it. So we did actually take out these equal highs here. We do have a nice inversion for value gap here if it closes below. So yeah, we'll have to monitor this, see if it can give us the inversion. After these highs are taken, if we get an inversion, that's nice, because then we have this, and then this. This is very obvious. So you see how this was a stop run? Wait a minute. So you see how this was a slight stop run? It is equal lows, right? So we have low over here as well that hasn't been taken. But this right here, right, when there's a low that gets taken and then we come back in the range, if we are going to look to see it continue to go lower through that, we like to see this type of stuff, a failure swing, because now it turned this from a stop run that may present high resistance to now low resistance if we do end up breaking through it. And I think we will, right? I think we will be able to get it. But again, it's just one of those kinds of weeks, you know? Yeah, pretty surprising that there wasn't really much that happened. I think the response to the last news event is going to lag. So I think they're getting closer to 630. We're in the 550 macro right now, so maybe it ends up going here. We'll have to just wait and see. But again, we have a breaker here. Make sure we keep tabs on that. But again, I do want to see if we can get up there. So that's a breaker right there. Time frame, 2 hour. Again, gun to my head, I want to see if we can get up here. Look at those equal highs that have been perfectly set. Look at how intentional they are. Right up into it. Right? And it's sitting there. Got a bullish order block from the news candle. Price is respecting it. Got an order block here. So we'll see what happens, guys. It's not a day to be crazy. All right, again, manage expectations. We'll see if this breaker can hold. Look how many times it's held that level. And we would come right off of it pretty aggressively. It's also an inversion here. So that's probably the more significant. It is the more significant level down there. So yeah. It's going to be a very slow day, I think. We'll see, obviously. It's already been slow the whole week. So they're either going to not do anything or we're going to get to the buy side. I don't see the sell side being too much of a concern. So again, gun to my head, I want to see us get up here. And it looks like we're probably going to get that. Oh, dude, I hate being sick, dude. So annoying. So it looks like everything we've outlined is still going to unfold. We got a small market maker buy model. The 15 seconds, see if there's a little bit of stuff that we can deal with. Got the 5 a.m. time. We're in the macro. We have accumulation, manipulation, distribution. If it's going to go higher, we should get rebalance right here and then redelivery up to the highs. And we got the macro for the timing, so we should slide on up through the highs. Remember, we got this outline here, which is the wicks. That's a pretty large wick in there. So again, I see this as a buy model. Anchor for the smart money reversal is at that breaker. Also, there's another breaker right there. So the larger breaker down here has a smaller breaker in here. As long as we keep supporting this, I think we'll be good. I think it should be able to slide on up through there. Still pre-market open. They may save it. They may bang around in here more. So that's why I'm going to be waiting. Don't really care if this thing goes up there right now or not. I'm not going to be a part of it. But these equal highs are just too obvious. It kind of did, surprisingly. Emmanuel, it kind of did. I still feel it being, my eyes sore still, which I don't know what the hell. Like, I didn't think that the screens would take a toll. I'm only 32 years old, but there's just so much time that I'm on these computers. It's just something that it's definitely an opportunity to emphasize how you got to take care of your eyes. Doing this, if you want to do it long term, you got to wear blue blocking glasses. It's not, going to help entirely, but you got to take care of your eyes. So I didn't think it was going to bother me. It didn't bother me for 7 years. Now all of a sudden I'm having some issues. So I can't imagine 10 years from now, 20 years from now. Hopefully not. It's not bad. We'll see. You got to do what you got to do. Your eyes are your money. If you can't see, you can't trade. So that and obviously other elements of your health. It's more important than any money you can make. Eating right, sleeping reasonably. I probably could do better at that, right? But kind of just is what it is, right? Yeah, S&P is going higher. That's going to just keep allowing this to offer buy side. We're at that midpoint of the wick. Again, this large wick, just like we talked about with the gaps in here, right? As it's moving up, we're looking at the quadrants as gripping points, right? You're climbing this mountain to these equal highs up here that are very obvious. Made that money yesterday. Go just have. I know, dude. I know. I'm trying to get like one of those cooling mattresses. I'm trying to make a decision though. There's a company named Nectar that I think I like. Well, there's another one too. I forgot. Oh, 8 Sleep. I've been seeing they have a lot of cool stuff too, like cooling mattresses and whatnot. I sleep really hot, so it could be 70 degrees in my house. I'm gonna wake up like sweating, like so hot. I don't know why I'm that way, but it is what it is. Need like a cooling mattress or something. Yeah, I'll probably go do that. I think that's a good idea. Made enough yesterday in one day to just go buy $5,000 mattress. Might as well take at least half of it. Oh, you have one? Oh, nice. Yeah, I get hit with ads so much. I'm always looking at their stuff, so I don't know why I haven't bought something yet. I'll probably do that in a little bit when we get off the call. Yeah, do you guys have any questions? Welcome everyone that's just hopped on. Already calling for the buys up here. Mapped it out before it happened. So already been kind of in lockstep with what's happening. Again, you got to manage your expectations. We are inside of a consolidation, so it could refuse to get up there and build liquidity even more, right? But so far, what we called in here, that breaker, it's worked out. Yeah, but I'm personally gonna elect to not take really anything at the moment. Wait till that 6:30 time. For those that may have not seen, this is what I shared yesterday. So buy from the low, swing trade. For those that don't know, we ain't just talking over here, okay? We do it every day for the most part. Maybe not 5,000 in a day. I'm not aggressive like that. I don't swing trade often. When I do, we're correct on the higher time frame most of the time. So you can imagine. That's why I want to trade options. I want to try. Been testing out a process the last few months, pretty much the whole year at this point. I'm liking what I'm seeing. It's just, you could say that. There's just a lot more you got to pay attention to. It's not just about direction. Isn't that lovely? Isn't it beautiful to know what the hell you're talking about every day? I talked about this in here as well. So that piece right there should hold if it's going to keep going higher. Said each quadrant is a grip in point as we look to get up to the highs. Talked about how this immediate news release candle getting us up to here, causing those equal highs very intentionally. That's highly suspect. And then they pull it all the way down, and then price ends up rallying up. I bet you there's a rejection block down there that it used. Yeah, right there. Rejection block. The gray box is a breaker. The green box in here is another breaker that's inside of that breaker on the larger view. This gray box is this breaker here. Where is it? Yeah, it's right there. So we got 1, 2, 3 drives pattern down below. So yeah, I think that, well, hopefully, best case scenario for today, we're going to get our full target. I've been waiting for all week, calling for all week. And first objective has been met nicely. If I was in a trade, I'd already be out. Or at least taking most of it off. So 1 for 1 already. It's not nothing new though, right? It's not a surprise. One thing I do want to mention, we got this large wick. Whenever you have a large wick that then gets overlapped, this whole entire thing now becomes a BPR. Something else to observe as well, we have this up delivery and down delivery. So now we have a bullish breaker in here. Preferably we're going to stay above this. So in a larger perspective, for a larger swing, we may be ready for this to engage. That to then send us up a little bit higher. Things that are above us up here, we got this wick. So we got the midpoint right up there. Oh no. Okay. So we should see rapid movement from this. Very, very light touch on this would be permitted. But this right here is a market maker buy model itself. This in here was a buy model. And we got accumulation over here. So I'm going to look at that. So the accumulation to distribution area. Assuming that this is going to in fact be a buy model. I think it is. Doesn't look like we've been wrong yet. Isn't it lovely to see this like this? I'm sure that a lot of people are confused this morning. It's in consolidation. They probably doubt themselves, probably blew their accounts, probably flailing, unfortunately. We've just been steady Eddie all week. Yeah, I really like this breaker here, and the fact that there's a large wick now with displacement. This whole range is a BPR in my opinion. So now we're trading up into these levels. Okay, we got a bearish order block here. It's a giant order block. Just a bunch of wicks on the higher time frame on the daily chart. I like this wick midpoint right there. Let me just take that and drag it over there. So again, this is accumulation to distribution. We have a breaker. So because of that duo, the accumulation to distribution and the breaker, we really don't want to see this thing go too deep into that. We're not expecting a very deep retracement. I hope you guys are able to follow along. I really do. I hope you guys are clear as far as what I'm talking about. Because if you are, this is absolutely clear. Like we have so much clarity. It's ridiculous. Like there's no doubt in my mind right now. Unless, of course, we lose that breaker. Then we have to fall back on the wick. And then if we lose that wick, we got to aim for these equal lows. Lots of trend line liquidity up there. Got to get these first, though. So yeah, it looks like they're going to be able to use the buy side today. Definitely got large SMT there. Look at the dollar. Dollar's falling. So we got accumulation, manipulation very slightly above the high, respecting the balanced price range idea that I talked about. Okay. So really all we're looking for in this moment is maybe something like this. Very typical occurrence out here. It's what we do. It's not a shocker that we're able to call what price is going to do, even in a condition that could be a little bit more tricky. So yeah, we should get speed through this high up here. Another accumulation area. So again, all gripping points, right? When you think about it from that lens, just makes it make more sense. We should hopefully get this thing to just spike up there right now. Okay, I'm not gonna lie, I'm a little salty I didn't look to engage this. This thing was beautiful. But all that matters is we got ahead of it. Again, this is not a unusual thing for us to be doing. Do this every single day, literally. And my private group students can call me out if I'm being a liar. But this is typical. What's up, Fancy? Welcome, brother. It's good to see you. But that's beautiful. Beautiful, beautiful, beautiful. Again, we can't get away from the fact that, well, we can't put the condition aside and not be aware of it, right? It's still in a range. It looks like we may be starting to open up, though, and finally look to take out these highs off the heels of that overall news event that just came out. It may just have been a lagged CPI delivery. They wanted to wait a little bit, cause more pain. Everybody thinks that the red folder that came out should be a heavy reaction, right? So what happens when it's not a heavy reaction and there's news in the coming days? Well, they could look to do the real move when no one's expecting it. Small ranges lead to large ranges. So we've already had pretty small ranges, right? Pretty small. So now I wouldn't be surprised if we get a large range. High up here, low, high, failure swing. Once this takes this out, it's really likely that this high is going to be taken, because that is what ICT calls a type 2 dealing range. It's also a mitigation block, bullish. It's also a bullish order block there. So yeah, what a beautiful reaction there, huh? The breaker tapped it once, stayed inside of it, closed at the mid, tapped it again, closed well above. And I mean, it just looks beautiful, doesn't it? I think it's a masterpiece. It just looks absolutely gorgeous. It's what we love to see. I still feel my throat not being too good. Don't necessarily feel that great this morning, but it's the way it is. Get over it. So yeah, I really do like at the core of this for us to see that type 2 dealing range continue. High, low, high failure swing. Breaking up above this high will send us up. It's likely to send us up through this. For the Dow, it's been a seek and destroy week. Buy side, sell side, both sides have been getting wrecked. And then the S&P here, again, has its own type 2 dealing range. Yeah, what's up, Maddie? So again, for any of you guys that are just hopping on, we've already called this buy up here before the fact, in the moment, narrated it all the way up to these highs. Talked about why, discussed a couple other things. Just to get you up to speed. I've done everything except tell you to get into a trade because I'm not a financial advisor and this ain't financial advice. But nonetheless, what we've talked about, what we narrated, what we've decided to operate within has worked out pretty flawlessly, if you ask me. So we got this accumulation level in here. Price is now, see that candle right there? The blue candle. I would not like to see, if it's going to be fast, I don't want to see it go through that to the downside. If it does, again, we have a couple of layers. We have a bullish breaker. We got this large wick, and then we got this bigger, more pronounced accumulation to gauge distribution off of. We'll see what happens. Again, we're still inside of a range, right? It's still coiling up, right? This is a channel. You think about retail, they want to see, is it going to breach the upper part of the channel and then go lower, or is it going to breach it, retrace into it, and then go higher? That's what they're thinking right now. One of those two scenarios. So keep that in mind. Again, this is a nice little baby market maker buy model. Lower to go higher. Here we go with this freaking blurry right eye. And now it's consecutive days in a row. I don't know what to do. I got to go to the doctor. It's consecutive days this is happening now, sadly. Still doesn't stop our precision though. Is what it is. Because if you just know, you know. So, do you guys have any questions? Just let me know in the chat. Have you been able to follow along? Getting that feedback is helpful. Again, hopefully you guys can see everything okay, hear everything okay. So yeah, the breaker's definitely holding up nicely. So this is actually my wick model in here too. Okay. Take that, measure it out. Got wick lower, taking stops. Next candle can't even get down to the wick midpoint or even the 25%. And we have it followed up by a change in state of delivery here. So then, once you have that sequence and you're anchored at a level like this and the higher time frame has a clear draw, many times this candle that gets above that is an entry. Or if the next candle opens up and trades down into this order block because of this back end context here, that would be a pretty likely scenario to then see price go up. Again, like I said, I want to see a shallow retracement here. We're going into 630. I'm not going to be very surprised if they hang around here until 630 comes out. And then, we get a flurry of price delivery. I honestly wouldn't even be surprised if the 630 comes out and that's what's going to be the trigger for us to then really, really get up there, target these upper levels. Got a new wick opening gap up here. It's been pretty impactful, huh? This high, that high, this high. It's so annoying. Ugh. I don't know what to do about my eyes. Kind of nervous about it. Don't want eye problems when what you do requires you to see, right? Never had eye issues either. But, there's a real price we pay if we don't take care of our eyes, especially in this. So yeah, it looks like we're going to get our continued delivery. That shallow retracement. It's unfolded pretty nicely. Accumulation, manipulation lower, distribution. We should get rebalance in the redelivery if we are going to get up there. Again, it's too close to the open, so I'm not going to consider. I should have engaged earlier, but I just made a decision that I'm going to wait anyway. It's because we're in consolidation, right? Didn't think that pre-market they'd want to accelerate like they did, but everything's set up. We outlined it. We were there for it. Walked it all the way up. We'll find something else. If you took that trade, that was a very nice trade. Okay, we framed it out from the start. 70 points pre-market. Simply aiming for the highs up here. Initially, we had these equal highs. Now we got this high. And then the deeper levels up there. It's going to be very interesting. Before we get up there, though, we have this high here. Okay. We wanted to get like a slight projection and go from this low to this high, try to see if there's any 2.5, 4.5 standard deviation confluences. Or right above this high, there's a confluence right there. When it gets up into that, you can expect some type of retracement to happen. Take this, where's 2 o'clock? Oh wait, 4 o'clock. 4. Where is 6? Yeah, I guess that's right. So from 4 a.m. to 6 a.m., take that range, that high and low. You can get some projections. Something new, right? We've got a little confluence in there, so I think we'll be able to get up beyond this high here. Again, the only way that I'd look to try to go short is if we were to break through this breaker, right? Like the breaker candle itself should be sensitive, but if it breaks through that whole thing, we're also disrespecting this wick here. So we got multiple PD arrays being violated against the overall objective, seeing price go through to the buy side. So if that was to be the case, then again, we could just easily shift our focus to these lows here. But I'm going to stay on the side of being bullish. We actually got a bullish order block here on the 4 hour. I like that a lot. So I guess it's a good thing you guys don't have any questions, huh? Must be doing something right. Put the 16 hour. Let's take the 8 hour. So yeah, there's another opportunity. Just too close to the open. Right? If all of this happened and 6:30 went lower and then rallied up into here, and we were closer to the macro, that's a situation I would have engaged. I would have liked to engage. It's just too close to the open at the moment. But those are my rules. Again, we got accumulation, manipulation into a logical level. We have an argument for these levels not to be violated or taken within the perspective of us going higher that we've painted, right? And then again, we have this bullish order block. Let's see. 8 hour. Eight-hour bullish order block. So yeah, let's see what they're going to want to do. I know for a fact that 630 is going to come out and they are going to get up and tag this. Now, are they going to wick through it and then try to come back lower and come back to the center of the equilibrium here? Because again, we're inside this high extreme to the low right there. So that equilibrium, if we hang around or try to gravitate back to it, that's a problem. And then when it leaves this range, leaves that equilibrium, it's going to be started from the midpoint or the equilibrium point. This may be what started the move, and we may just continue. It may not have to come back. But again, we're just going to have to feel it out, wait and see, what it's going to want to do in that regard. But so far, it looks like this is holding. We have high, low, higher, high. Got a breaker holding. We're pushing away from equilibrium. Got a bullish order block there. Ugh. So annoying. Yeah, what a beautiful move that was, huh? It's just flawless delivery up there. London, very slow. We generally like to see London like this. Very slow, very unwilling to do anything too crazy. Okay, so now we got regular trading hours gap. So right out the gate, we came down, tagging the breaker. Let's see what it does. Accumulation, manipulation. If we get up above this high, we get distribution, then rebalance, and then redelivery. Assuming that we are going to continue with this buy side. Again, there's a risk of it coming back to equilibrium because we're not out of the range yet. So that it's a risk. It's a problem. That's why the condition today, like I started the call with, should have managed expectations. But yeah, I think this wick is going to be nice to get us up through the high up there. So would really like to see that be just a retracement. Staying in the upper half of the regular trading hours gap. Again, that's a PD array. When we trade into PD arrays, if we're bullish, we need to respect the upper 25 to 50%. So we'll see how aggressive this thing wants to be. But again, I don't think they're going to leave those highs. If they do, what could you do, right? You just got to be trading intraday volatility and not really expect huge swings. We do got the dollar pushing up a little bit, so that's kind of allowing for, this downside. We'll see how deep the dollar wants to go. Oh, wait, see? I hate when it does that. Like one time frame will look one way and the other one will look different. So yeah, we're really, really contesting some of these levels we don't want to see get contested. So that breaker, if it gets below it, again, those equal lows become something of interest. We talked about earlier for contingency plan. Actually clean that up. So yeah, price gets through this level, it's going to be an issue. If price gets down through all of this, hugs the low of this regular trading hours gap, this may be turning into a market maker sell model, simply to aim at these equal lows here. See, I'm not interested in any of this right now. Anyone that was in a buy and they held it and got greedy, you know, this is the issue with this type of condition. If you're trying to catch hundreds of handles and you want to catch like the large trending style moves when price is clearly in consolidation, you're asking to get burned and give up money that should have been in the account. This right here is going to be a change in state of delivery if we can get above that. So I think that that would be a pretty ideal scenario. So yeah, we're peaking up above that. So let's see how it treats that. If this doesn't allow to get up above this high, do got rejection block there. But if this thing rejects aggressively and continues to break down and closes below this wick here, the midpoint, it's an early sign that we're going to end up getting these lows. I'm watching this right here. I want to see, this is an 8-hour bullish order block. So that's beautiful. If we can get a little candle that forms in that while it respects this like this, that's a beautiful scenario. And then hopefully dollar can keep going lower. Okay, we should accelerate from here. Damn, it didn't offer me, I just wanted one new candle, little wick. I would have been able to take that. So that's beautiful right there. You see how I didn't automatically jump to say, oh yeah, let's take a short. It's going lower a little bit. I'm waiting for certain things and it didn't fulfill those things. So the bullishness is still intact. And I just said, when it changes state there, it should take off. Right. Obviously observing the likelihood of this hitting that and then breaking down a little more. But, you know, obviously that wasn't the focus, hasn't been the focus. Here's the daily wick midpoint. That's going to be important to watch. So that right there, that was a beautiful move. I would have just, rather than printed this candle, give us at least a little wick. This was enough though. Mind you, it's trading into an 8-hour bullish order block. So that's what's holding precedence over any of this on the lower time frame. So yeah, it looks like we're finally going to get our run up there. Use this breaker as the move. So can we get, it's probably not going to offer me an opportunity for retracement, sadly. But the overall analysis on point, what we want to see price do. I'm a little salty that this thing didn't offer me one little stutter. I almost looked to execute right when it was breaching that. Set those equal highs too. See how it primed it, yanked it back, make people think it's going to go lower. Got that high up here. It's 75% of the quadrant on that wick. Yeah, it's just going to be off to the races here. Small ranges lead to large ranges. Today is the large range. So now that we're above this, that's a balanced price range. So any return down into that should be able to be sensitive. It's just not going to offer anything. in terms of continuation. It's in a real hurry. Like I said, accumulation, manipulation, distribution. I wanted to be able to catch a rebalance. But I literally mapped this out. I said, watch this being accumulation, manipulation, distribution, rebalance, redelivery. We just didn't get the rebalance, which is what I wanted to enter on, which is unfortunate. Oh, that's a crazy move, right? Is what it is. Called the buy here. Mapped out this possible scenario. Obviously waited. I wanted to see the return down into that. But I think we are going to absolutely fly through. I wouldn't chase this if I was you. Got that fair value gap. It'd be a little ballsy to take that. But clearly we're looking to take these highs. So, maybe that offers something reasonable, but you got to accept the risk. Are you willing to accept that risk? Put your stop down here. Stop at least below that. Dollar is really accelerating. So let's see, is it going to give it up? Is it going to finally give it up, or are they going to play games? They very easily could play games. See, it looks like they're in a mode of expansion here. Is it going to give it in that one shot right there? Are we going to shoot straight up? I mean, small ranges lead to large ranges, so I mean, I wouldn't be surprised. But let's see. It's been a spectacular acceleration right there. See what happens. Looks like they're not slowing down at all. Let's go with the 1 hour. So dollar is kind of pulling back a little bit. So I wouldn't be surprised if some type of retracement happens soon. So I was able to take that off. So that from right there up 30 points. How many points was that? I knew they were going to start to turn. Knew they were going to do something. So yeah, this is a retracement in here. Here, I'll show you the business real quick. I don't think that this is going to come all the way back down. I really don't. This is just a retracement. I mean, we're so close to that upper part. I think we're going to blow that out. It's taken all week, but nonetheless. See, there's that little move right there, right at the high. How many points was that? In the lower part of that candle. It's about, yeah, it's about 30 exactly. So a little baby bread and butter. Wanted to see a little retracement in there. Just didn't offer it, and it's totally fine. Amp live. So I got my little piece that I'm satisfied with, but highly risky because of the likelihood of retracement. With this retracement happening, if we can get this thing to come down a little bit and then get a change in state of delivery, or maybe it comes down, leaves a breaker, right? Say it does something like this, sets up a breaker, maybe it comes down, failure swing, right? Execution could be labeled there. We don't want to see it go too deep, because again, we already got the whole balanced price range in here now. We're so close to these highs up here. I want that upper target. I mean, obviously this was a great move down there. It's just too close to the open. If this would have happened around this time right now, I would have had no issue just executing that and just taking it up, stop below the low. And as it goes 30 point increments, or as it takes out PD arrays on the left side, I'm moving my stop, taking risk off. Yeah, this is why you don't chase price in here, right? When it's accelerating, you want to wait. I wasn't necessarily too sure. Luckily, it offered me 30 points, so I got out with something reasonable. But this is the better idea here, right? It's to wait for this to happen. I just wasn't sure how fast they were going to want to take this, because it's taken a long time this week to even do anything. This is still very shallow. We're inside of a fair value gap. Again, if it takes out this high here, that's going to be really nice, because that's a change in state. So you should expect that. Okay, so we got a retracement. So accumulation, manipulation, distribution, rebalance. We should get redelivery again. We got our change in state right there, so it should be able to fly from that, signaling that it's time to go. Right? See how it's doing that? Does what I just described make sense? A lot of people don't understand how important this stuff is. So, do you know if you have chronic drives? Yeah, I'm not sure. I'm not sure if, because it's just started to happen. I do have these eye drops over here. It's like eye lubricant things. This little, what is it called? I don't even know what this brand is. Refresh Optive or something like that. So yeah, full target's now been met. So man, what a spectacular analysis we did today. On point more than ever. Right? No, Mike, I took the it's about 4,900 yesterday. I should have held it. I knew it was going to get up here. So, I mean, when you see almost $5,000, you'll accept it and be good with it. I could have held it more, but again, I'm not greedy. I'm just not greedy. I don't need so much. But I could have. Obviously, it would have been great if I did hold it. If I had more than one contract, I definitely would have taken partials on that, because it's a swing trade. Swing trading is a different mindset, right? So I definitely should have held it in here, right? Simply put your, could have put my stop down below that. It's a little bit, yeah, no, that would have been reasonable. That would have been reasonable. Back to the 20 to 30 point habit. I'm trying to get away from that. But there's nothing wrong with it. SpaceX, huh? Yeah, options. It's good to take swing trades. That's all you're going to want to do. At least me. I'm not going to take any day trades when it comes to options, right? I'm only going to swing trade options at least a month or two. And then when it's in profit, I'm not going to let it go the whole time. So an extra added cash flow, right? Jen said 894. Oh yeah, you're a savage. Nice. So you did engage in there. So you were cool with right at 630 and not requiring the rebalance. So you positioned kind of in the start, the first change in state of delivery in there. It's pretty much, that's where your entry is at, right there. Change state of delivery, stop below the low, trusting the breaker, trusting the analysis. I just wanted to see this one little tiny retracement. So did it offer it? No, see, it didn't even offer it. Look, you see this in here? In that little retracement to go higher on the larger perspective, you have a market maker buy model. Consolidation, accumulation, smart money reversal, reaccumulation, or a distribution, right? And then target. This is how you could use the market maker models as an entry tactic, right? You just identify a retracement that's ready to go higher on, say, the 15-minute or whatever time frame. Drop down into that swing point that makes sense to turn, and then you could see stuff like this, and your entry can be on one of the phases, right? It could be an order block, it could be a fair value gap, it could be, you know, whatever. Yeah, I'm a little bit salty. I should have re-entered, honestly, in this. So now we got breaker. I probably would have been more enticed if we would have got at least one little wick in there, but it's very fast. They're in a hurry today, right? They went up there. We called the buys down in here, aiming for the equal highs. Mapped out the market maker buy model, right? Lower to go higher. Talked about these equal highs. Talked about this upper level in here. Talked about gripping points the price was grabbing onto. Framed out for the whole entire week the 20-day look back as our target. So literally everything from Sunday to today literally is all in play and has been absolutely spectacular, which is, you know, many times the case. But I mean, what a beautiful extrapolated move that was, huh? Whenever you have days like previous days that are extremely slow, notice the open price too. Daily open price, accumulation, price manipulated below it, right? Reached into the 8-hour bullish order block, right? Also the breaker in here. So all those lows, along with it being below the open price, allowed for pretty extreme clarity this morning. The price was going to keep going higher. Not one time did I think shorts or push you guys to even think shorts. It's been all bullish. It's been all, let's aim for the highs. It was based on all the slow movement that took place last couple of days, the indecisive type of week, the fact that we're below the open price. That's another thing. This entry in here, Jen, you were a little close to it, the open price, but the entries over here that I talked about pre-market, as it went higher, we were below the open price for the week too. So we got the best buys coming from below the weekly open, but then for the day, right, the best buys come from below the daily open. So we had the daily open that got traded through. So look at this. This is something I kind of missed, unfortunately. I don't know how I missed that. This was an intentional manipulation to get us down below the open price. That's literally all it did. And then from that, smart money accumulated their orders inside of the things that we talked about to frame out the likelihood of this continuing. And then they dogpiled on. We have a breaker in there. I should have went down to the seconds chart because that's a breaker right there. Beautiful entry. Beautiful. So breaker there, market maker buy model on the 15-second. Retracement into the bullish breaker here. So small breaker inside of a bigger one. The wick here acting as a BPR. High, low, higher, high. Also a balanced price range. Below the open price, bullish, equal highs. Slow previous day. Below the weekly open. Dollar going lower, or looks like it's going to go lower. More of a sentiment to go lower, right? So now we're getting up into this, so I think we should be able to pick up from here and go lower. The weekly perspective, obviously it's been a little bit bullish, but it's coming up into a logical level. We should see price respect that and then just absolutely tank. And again, that should send these higher. Currencies are still playing games. Notice the yields are dropping and the bonds are rallying. What is that happening? Or what's happening in the chart because of that? Dollar still looks like it wants to go lower. Indices are flying to the buy side. So correlation showing big bullish candle in the bonds, big bearish candle in the yields. That's having a bullish impact on the NASDAQ and the indices. Just this is one of the clearest signs or justifications for why I spend time on the bonds and yields and why our analysis is so thorough. And we're not just looking for things that are happening on the NASDAQ. This run higher is so much more solidified in our psyche when we have all the things that we've talked about this morning. I mean, think about it. I have not been confused at all, right? We laid out contingencies, obviously, just in case, as you always should, because you never know, right? But everything lined up with bullishness, so we stuck to that. And as you guys can see, what a beautiful move. I talked about continuation happening here too. I participated in that little run, right? I could have waited, right? Let it come down into this fair value gap I outlined. Said I didn't want to see it go beyond that. We want a shallow retracement to then continuation. And I offered it, right? So I literally entered here. Could have put my stop below this and that would have been reasonable. I think it's because my eyes are really bothering me today. I was not really, just not in the mood to really sit in a trade and hold it for whatever reason today. I knew this thing was going to go up. I was contemplating in my head, should I wait? But 42 points is not a big stop loss. It's a little bit bigger, but the volatility, you know, you got to afford yourself a little bit of leeway. But nonetheless, good job, Jen. You are a savage. Super proud of you. Let's see, offer 30 seconds. What's he been looking? I'm going to start teaching options probably in a couple of months. Just, I said when I first started really diving in that I want to give it 6 months of demo and cultivate my process. It obviously is this process that we use here, but options has a little bit more that, you know, you got to pay attention to, like time decay and theta, delta, all these things. There's so many things that could make it so you're correct on direction, but you're wrong and you still lose money, even though you were correct on direction because maybe it didn't move fast enough, or maybe you didn't give it enough time. That's one of the main reasons I'm only going to swing trade options when I do start teaching them. I'm not going to take day trade options, zero DTE or whatever they call it. I'm just not going to do it. I already day trade futures, right? I don't need to do that with options. I think swing trading is very easy, right? It's extremely easy. Look how much we're correct on the higher time frame. Like every single week, we're able to call the direction. So why would we not turn that into something that you can make money off of outside of day trading? You know, have a big trade running in the background like I did the last couple of days with this rally, right? And then just day trade in between. So double cash flow. That is called maximizing, okay? Let me see. It offered on Thursday. Yeah, rules hurt, Emmanuel. They definitely hurt. It's okay though. It's okay though. What really truly matters is, does it make sense why it rallied? Because you can carry that into the next trade, into the next part of your journey, right? And you continuously build these case studies, seeing it before it happens, explaining it, and you understanding it. You know, at some point you're going to look at the chart and engage with no emotion, with no doubt, because you've seen it before, you've been here before, and these waters are not as treacherous as they used to be. And then things get really fun after that. But that's something that can't be replaced by anything. There's no replacement to experience. Now, you got to have the right experience, have people that know what they're talking about, right? But over time, it becomes nice. So let me see. This tape looks easy. I think it's pretty easy. That was a pretty easy read today, brother. You definitely always got to manage your risk. But yeah, today was a much easier read than yesterday. Yesterday wasn't too difficult, but it's just been very slow in comparison to, look at the candle. I'm getting more salty by the minute that I didn't hold on to that. That would have been pretty nice. I already had a pretty reasonable week, but come on. Seen this from a mile away. See, be careful. Yeah, no, you got to absolutely be careful chasing price now. This is way overextended. This was already a pretty reasonable run. So you can reasonably expect, because liquidity hasn't been engaged. All right, it's new all-time highs. No, it's not new all-time highs. But we're on our way there though. So we'll see how far it wants to go. But up in here, it's very risky to try to engage. I'd rather see this thing come down, take out these equal lows, and then if it decides to run higher again, you know, maybe look for something in the next macro. Or we're in the macro right now. You know, they may use this macro to bring it down. Right? Just come and wipe some of this out and then give another leg. Yeah, I'd be very cautious in this. It's super, super aggressive. Everybody's now trying to buy. I guarantee you that. They've been trying to buy, and they've been getting wrecked in this consolidation. Right? But all of this hasn't swayed us at all. Again, just a testament to trusting the higher time frame. Let me see. I think that was... Yeah, it could have definitely been pretty painful, that's for sure. Getting stuck in here, trying to anticipate it going through that, and it just doesn't do it. Got up here and they hung around. So lots of time distortion this week. It's typical for CPI though, you know what I mean? You got to come into these weeks expecting that, lowering your risk, making sure that you're not doing too much, overextending yourself. See, Jen, I see. I missed it for the same reason I did. Wasn't looking to engage. Yeah, no, exactly, Emmanuel. That's what it was. That's what it was for me, for sure. Yeah, Jen, if you're holding that trade still, you're amazing. Even without holding it, you're still amazing. But absolutely amazing price swing right there. Axe, good morning. Yeah, the grass is flourishingly green on this side of on this side of the world. QQQ can move same. You know, QQQ is just like a carbon copy, pretty much, of NASDAQ, essentially. Heavy correlation, same assets. Always want to roll or sell your options before 20 days. Yeah, that's what I've been discovering. You don't want to hold it till full expiration, because you could be correct but get screwed. So what a mess, right? So whenever you're in profit in an option, if it's a reasonable size, again, just like day trades, right? You don't want to be greedy. Don't try to squeeze every single piece of it. You whenever you get a reasonable amount, set your goals. And then when you hit those goals, go ahead and take it. Think of it as cash flow, not every single trade is going to totally change my life. It needs to be 20 grand, 50 grand, make it so I don't have to work on every individual trade. Every base hit that you engage properly and every risk that you manage, every loss that you don't let spiral out of control, it's a deposit, right, in your future not needing a job bank account, right? So every time you follow the rules, every time you miss a trade, but it's because you followed the rules and you're being disciplined, that's another deposit. Because when the time comes and you got to let your discipline shine because of a shitty condition, you're going to be ready for it and you're not going to overtrade, over leverage, or do anything crazy. You'll accept the losses. You won't be greedy with the wins. You'll take the base hits and understand and admit to yourself that your success in trading is not going to come from one setup, 1 week, 1 month, or even 1 year, right? It's going to come from you consistently knocking down reasonable base hits. In my opinion, 30 points is reasonable. It's enough. You don't really need more than that at first or ever. You could live in 20 to 30 points, right? I've done it for a long time, right? For 4.5 years, and just recently I started thinking, all right, well, I'm calling these giant moves. It's time to now stop leaving money on the table, right? Let's accelerate what it is that we've already been able to accomplish by actually letting our full trade manifest and holding much more. But I've gotten so comfortable with 20 to 30 points. I've been able to do a lot by scaling 20 to 30 points that I don't honestly have to do anything else. Obviously, I want to do more because I'm at a level where, I feel that, that's an improvement that can happen because we're already calling the moves. They're already running hundreds of handles, like all the time. And it's not even just my opinion. Like, just watch these videos every single week. Watch what we do from Sunday to Friday. The moves are ridiculous because the framework we use is precise, it's effective, and the market's operating with these different things. So it runs hundreds of handles. So over time, it gets to the point where it becomes kind of ridiculous to not capture more. Especially if it has to do with like a trust thing. If you don't trust the move, but every day we're calling moves that work out well beyond 20 to 30 points, eventually you're going to get bored with 30 points. And I'm at that point, right? And 30 points is enough. One contract capturing 30 points, it's one thing. But if you have 5 contracts, if you have a mini contract, look what I did the other day. Literally, yesterday when I showed the screenshot. One contract on the E-mini made $5,000. One contract just allowed it to run because our framework on the higher time frame is precise. And I believe in my narrative and I stick to it because I know it doesn't change every day. You might have to sit through a daily retracement, a bearish candle and a bullish trend. But unless our validation principles are taken out, we stick to that direction for weeks. And everything else internally, right, inside of that delivery is either counter trend or consolidation. And we're very short term when it comes to those things because the bigger wave is going to push. So yeah, good morning, Z. Appreciate you hopping on. Yeah, let me know in the chat, how's the experience been today? Did you guys learn a lot? Is it very edifying to see what we've done today? We were on this thing like white on rice. Like, this thing did not fool us in the slightest bit. We called the buy down here. Talked about this, right? We had to watch that. As long as it respected this, it'll still be a buy. Talked about accumulation, manipulation, distribution. I wanted the rebalance. It didn't offer it, so I ended up missing the trade setup. I should have just went to the 30-second chart or 15-second. Would have caught this as a market maker buy model breaker, right? Accumulation to distribution, drop down, intentional run below the open price, set the low and then rally. All of this stuff stayed intact. Dollar was dropping, bearish. The other indices support bullishness, relative equal highs above us, 8-hour bullish order block in there, also was sustained, right here, this retracement. Let me see. Jay said more times than not, after heavy news event like CPI, the breakout is, yeah, it's pretty clean. It's pretty clean a lot of times. If CPI comes and things are very slow after a heavy news event, same thing with NFP, FOMC. If the news event comes out and it doesn't do anything and there's another red folder the next day, many times the breakout is going to be wild. Because again, small ranges lead to large ranges. Everyone's expectation the day before when the news came out, like NFP, CPI, would have been typically extremely exaggerated. They expect the exaggeration because it's what happens most times. But when there's no response really, and it's very controlled, it's very limited, and you have a very obvious target like this that's clearly available, you can expect that there's going to become a pretty big expansion, right? Sometimes it'll lag through it, right? And the whole week will be shitty. But most times, this is what you'll get, especially since we set this up, right? We had a breaker. Just think about how in-depth we've been today, how on point we've been. It's not like a million things either, right? Like we were able to determine what was more likely with a pretty high level of certainty, aside from the fact that, of course, aside from the fact that we're inside of the consolidation. That always poses a risk. So you got to be reasonable, right? You got to be realistic. But nonetheless, nothing upset the underlying objective, which was for us to get to that 30,100, 30,080 level, and it's pushed even beyond. And again, the 20-day look back, I mapped out that liquidity pool on Sunday. We talked about it. We talked about everything. So everything from Sunday up to now, yet again, for the millionth week in a row, has pretty solidly worked out, right? By the end of the week, everything that we've discussed has been hit, right? Yet again. So you can add this to, right? Add this to the archive of weeks that worked out beautifully from start to finish, give or take some of the, slower movement. Even in the slower movement, have we not called setups every single day this week? Like we've called the move every single time I've been live, right? We've pointed something out that's worked out. And in my private group, we do it every single day. Same as this, just every single day without fail, right? Some days are harder than others, of course, and I'm not perfect. I do get it wrong, but when I get it wrong, I know how to adjust and get back in line, and I showcase that skill set as well. Let me see, the macro I waited for. It's very uneventful. Which macro? Are you talking about 650? 650 worked out. It was just kind of this one right here. I didn't even notice that retracement was in a macro. Did I mention that? I think I overlooked that actually. Yeah, that definitely, seeing that macro right here, I definitely should have waited. Waiting for that macro would have been better. I just wasn't sure if it was going to just accelerate aggressively, so I just took it. And again, 30 points is good. I could have put my stop down here like we talked about earlier. There's nothing wrong with that. That's where my stop was initially anyway. But yeah, 30 points is enough. But yeah, let me see. Coming back for them all-time highs. Yeah, that'd be nice. See if we can get up there. I think we'll get up there. So yeah, we'll see what happens. This thing is just continuously racing, huh? I think they're really in a hurry to try to get up there. Ooh, we got the Dow having a hard time, huh? So we have that right there that needs to be considered. So this high right there, so that's our 60, 40-day. It's our 40-day target. Ooh, I like those equal highs there for the 60-day. Again, nothing's changed. Literally 0 things have changed. 0. So look what's happened here. We talked about this being a market maker buy model. I talked about how I'm going to be bullish unless this low gets taken out on this candle. You know, we afforded the ability for this to want to come down and take some of this. But again, the sell side to buy side balanced price range overall functionality has beautifully held up in price. The bullish order block here that I outlined beautifully held up in price. Did we even close below that at all? It just reached below it to get below the current day's open price. And we set a bullish power 3, as you could see. Barely even attempted this 4-hour or a 2-day order block. That's a daily order block. It's reacting off of a daily PD array. What happens when we're correct about that? It accelerates aggressively. I've mentioned this many times. You want to frame your setups when it's going into higher time frame PD arrays or higher time frame liquidity pools. If you don't, that's why your trades are very lackluster. That's the main separator between my trade setups, why they run hundreds of handles almost every time versus some other guy that stays on the 1 minute only, right? And doesn't have a depth of knowledge like we showcase. You got to frame from those higher time frames. I don't care if you think it takes too long. I really don't care, right? You're going to have to fix that mindset. If you have to focus on the lower time frame because you think more is happening and you're disregarding the higher time frame structure, right? The structural framework from higher time frame PD arrays, if you're avoiding that because it takes too long and you're not willing to wait for it, you're literally shooting your foot, right? You're shooting your own foot, right? You're chopping your own leg off when you don't have to. Okay? You just got to wait, right? Wait till wait till you see how it treats these PD arrays from at least a 1 hour and beyond. You can get away with 15-minute as well if you're taking trades on the seconds chart. But all of that needs to also be supported by something like this, right? And again, students either do this or they don't. And the students that do this and can see why it's important because everything runs off that higher time frame, those are the students that succeed, that see a lot of improvement in their trade selection and a lot of improvement in their entry selection, more so than others, right? The ones that focus on this. ICT himself, he says, well, I forgot when he said this, but he said it multiple times and it stuck with me to this very day. And that's why I focus on what I focus on, right? But he has said, when a student asked him from the private group, what time frame do you spend the most time on? And he said the higher time frame, daily, weekly, monthly, quarterly, etc. Right? And his reasoning is what I just described. Do you want to catch bigger moves or not? Because if you want bigger moves, if you want to catch more large ranges that are extremely exaggerated, those are only found with higher time frame context. And I don't care who tells you otherwise. Have them prove it, right? Whatever the hell they're saying that contests that idea. They can't, but we can. I do it every week, every day, right? I mean, there's so many recorded videos showing this perspective that I've done. So many live calls, just so many, including today, right? So it is what it is, okay? There's no avoiding it. And the more that you avoid it, the more that, you know, those students are going to keep funding the other side of our trade, the people that do use this stuff. They're going to keep funding the other side of our trade. And we need them, right? We need people to fund the other side of the trade and not see things this way. We need that. Otherwise, you know, everyone will be successful, or we just won't have enough liquidity. So, again, take this stuff to heart, you guys. Really, really take this stuff to heart. If you haven't been doing this, every time you backtest your model, it's useless outside of just simply using, like, trying to study pattern recognition. But it's useless. Every setup is useless if you don't also incorporate what that higher time frame looks like in that example. If you take a buy position here on the 5-minute, you need to take a screenshot like this with an arrow showing this is where the entry was located, and then explain it below the open price at a higher time frame level, right? And then when you get to the lower time frame, you have the kill zone, you have maybe other supporting PD arrays that are in line, maybe you have a market maker buy model, or, you know, whatever is supporting you, right? Maybe there's a rejection block, other PD arrays holding the setup. But at the core foundation of good trade setups, specifically using ICT's concepts to find the best PD arrays, the most effective moments where your main PD array is going to work out, or any other PD array, the way to filter and avoid absolutely shitty trade setups is to make sure that every setup you take has a higher time frame level attached to it. And I'm telling you, I'm going to say it again. If you don't do this, you're going to keep getting wrecked. Period. Because the setups fail, the PD arrays don't work because they lack context. Okay? Most people don't have context. They think that the 5-minute is all the context they need. It's not. Okay? If you want big moves, unless you're a micro scalper on the 15-second chart, then sure, you know, if you're going back and forth, not really caring about bias, and you just want to capture, you know, 10 to 30 points, right? And that's it. And you get out every time and have no interest in getting bigger, longer term moves or being part of these hundreds and hundreds of handles, then sure, you can get away with smaller, lower time frame, less context type of delivery. But even with that perspective, you want to be on the right side and know when it's going to rip aggressively. And that those moments come from time frames like this. And just like how ICT says he spends more time on the higher time frame than any other time frame, because of this fact, I also spend the most time on the higher time frames because it's a fact. And the only way that I accepted this was when time passed, when I was sick of entering trades that didn't work. And then I had 2 other mentors that also reinforced it even deeper for me. Right? That's all they did every week, higher time frame. Right? And then they made me go find the setup. Well, they're like, "What's your model?" I said, "Breakers." Okay, here's a higher time frame context. Use this and go find a trade setup this week. And I did that for weeks, months, until it clicked. And I'm like, oh, well, to pick the best, because then of course I was doing my own thing, right? They would tell me to do something and I'm stubborn. So I was like, nah, well, it takes too long. Made excuses. All the same stuff that everyone does when they come to someone that they're trying to learn from. They try to teach themselves while being taught, thinking that they know better, but they're the ones asking for help. And then they do what they're going to do, and they continue to fail until they fail so much they're forced to submit and then start to change things. And then all of a sudden, magically, the fog lifts right? Obviously, that only happens when you're learning from someone that knows, right? 20-year-olds on the internet, unless they've crossed my camp and spent time with ICT for a while, none of these 20-year-olds know what they're talking about at all. Like, they don't know what they just don't know. They're good at social media, but they just don't know. There's only one in particular that I know of that stands out from that, really young crowd. Maybe not one. There's a handful of them, but they've spent like 7 years learning already. So they're not just 20-year-olds that just learned like a year ago, right? But again, it all takes time. Over time, if you take what I'm saying seriously, and every trade setup that you take, every screenshot that you take, everything you consider now has a higher time frame level attached to it, I'm telling you, it's going to take 2 weeks for you to notice, like, holy crap, like this is really important, right? I'm no longer finding shitty trade setups that look like they're going to work, but then they fail because you missed something, right? What did you miss? Higher time frame. You're not in a level that should support things. It could be a wick that this next candle is trading down into. That wick is an origin of the move. Origin PD array for that daily range, the next daily range, right? It could be an accumulation level like this that price trades down into. You could even trade to it, right? We have a bearish order block. Price hit the midpoint. That's the origin PD array to trigger the response lower back into this accumulation. We hit that accumulation and it reacts. The move that you could find down in here, once price responds from that level, is going to be significant. It's going to be very easy because it's going to be responsive. You're not going to get stuck not doing anything because they go off these higher time frames. These levels, and when they react to them, it's like a filtration process. It's a likelihood amplifier. Okay? Right? No higher time frame context, no trade setup. That's a rule that I had for so long. And honestly, I still use it today. If I can't determine what we're doing, I'm obviously a little bit more well-versed now with, micro intraday volatility and liquidity navigation. But, the core of how I got to where I'm at, how I'm able to be accurate the way that I am, it's the anchor is obviously Power 3 and market maker models, but Power 3 and market maker models coupled with higher time frame PD arrays and how that higher time frame influences that lower time frame. So every setup I take needs to have a context that's larger than the one that I'm executing on. Because you could be deceived very easy, and this helps it helps prevent that. You're still going to lose, right? You're still going to face some difficulty here and there. But over time, this perspective helps you narrow and solidify what does work, where good setups form, and then lower time frame shows when they're going to form, right? And if you're looking at the weekly perspective, the day of the week has a high likelihood of certain things unfolding, like the low of the week on Tuesday or Wednesday. So you could really start to narrow things down. And if the low of the week on Tuesday forms inside of a bullish PD array on the daily chart, and you have equal highs available above us, that's like setting up a barn burner. Like you're loading up the bazooka ready to shoot the tank, okay? And then once it all aligns, once you get your model showing up, everything's in agreement, you let it go. And then you capture what your goals are. You know what I mean? Yeah, finally got a full target. Hey, Fotis, if you're still here, good job, bro. Appreciate the transparency. Man. And this is just nuts. It's just nuts. Amazing. 323 ticks. Amazing. Amazing. Another one. It's amazing. One of my students, Nico, from the other day. I mean, absolutely crushing it. Shout out Jen, by the way. Jen, again, you're amazing. This is what she did the other day on the 11th. So like a couple days ago. And then she just caught this huge move from 894. Amazing. Fotis crushing it again. One of my longtime students. Jen. Look how spectacular Jen is. I'm telling you. She's going to be something special. She keeps this up. Man. Nuts. Emmanuel. Beautiful Emmanuel. I mean, it just goes on forever. All this stuff, there's just so many things from using what we talk about, what's taught here. I mean, it's endless how many people do very well using this stuff, because you get clarity. It's not rocket science, and it just works. I prove it. You know, people that come to me prove it. You know, once I get them focused on the right things. It's just undeniable. There's no competition. I don't see competition at all for what I do. There is none. You know, I don't see any of these other live streamers coming out here every single day, every week. Oh, I'm not live every day here on YouTube, but I'm live every day in my private group. And I'm coming out every single day calling out something to be able to participate in. Right? Doesn't mean that every trade setup works. But every day we're able to get back in line. Every day we have an opportunity to mitigate risk, to mitigate drawdown. Every day there's something that shows up. So losses are literally dumb. It doesn't matter. If you take a loss or end the day negative, being here in this community, it doesn't matter. You'll make it back. How do you know that? Especially if you're new. Well, sit on these calls and watch me do it every single day and show you that eventually you'll be able to get to that point, hopefully, right? Do all the right things, you know, listen to good advice, do the work that's required. Obviously, there's no guarantees, and this ain't financial advice. But again, you know, you can only see something so often, so many times over and over and over again before you start to truly believe that that's a fact, you know? Like, it's a fact. It's possible. You can do it. And then, you know, it's different for everybody when you arrive, but you know, you have something that works. I'm not overly complex. There's very specific things that I like to focus on every single day, and they're there every single day. Your model, whatever that is, it's there every day. You just have to be able to learn how to navigate the time frames, understand context, when to trade, when not to trade, all of which is taught here, right? A couple of times a week on YouTube, and you know, multiple times every single week, privately in my private group, every day. And again, these are big statements that I'm saying. If I was lying, these students have no reason to sit here and lie to me. My channel's not that big, you know, like there's just zero reason for them to try to, like, you know, stand up for something that's a lie. It's just not. It's true. So with that being said, there's light at the end of the tunnel. Anything that you go through, it doesn't matter. You can make it back at some point, but you got to get the process down. You have to know what you're doing. You have to absorb the correct information, and then you got to practice. I've spent 7 years of my life doing this. I didn't just wake up one day and it's a year later. It took me 3 years almost to be understanding what it is that I'm doing. Right? And then once I was able to master the process, you know, with a lot of help from, you know, ICT, a lot of help from my 2 other mentors that I paid for to work with me one-on-one. But through all of that, things just became exponential after year 3. Like, it's ridiculous. Every day I'm able to find something. I've been able to do that since year 3. Didn't trust it fully back then, because trust takes time. And then year 4 came, and then year 5 came, and I beat one year, beat the next year, beat the next year. And this year, it's not even done with the year. And I'm about to beat last year, which was my biggest year. It's just constant improvement. Because again, this stuff is just, after a while, it becomes so repetitive and it becomes so ingrained in your mind to the point where every single day now, which is something I never thought I'd be able to say, every single day we're able to find something. Obviously, there's human error that could stop the profitability. There's mindset error. There's things that you may hesitate on that may stop it, but it still may be correct. So there's going to be times where you're not able to engage and take advantage of it. But every single day, we're able to call where price is going to go. Again, that in no way guarantees that you will be profitable just because that's the case. Being able to call the market doesn't mean that you're able to trade it profitably. Trading and calling the market are two different things, you know? So you got to, over time, understand that eventually they'll converge. But it takes time. You got to trust yourself. You got to trust the analysis. That only comes from practice. It only comes from being around the right information. It comes from putting in the reps. You can't get ripped at the gym if you don't go to the gym all the time and stay consistent. Well, you can't be a profitable trader if you're not showing up constantly, putting everything you have into this, listening to good advice, you know, critiquing your process, trying to be positive, cultivating your mindset. It's a lot that goes into this. But again, there's no other concept on the internet that allows us to do what you see myself do, let alone see what ICT does, or, you know, any of these other, you know, big ICT traders. Most of them are not able to come out here and call a trade setup every day that offers the ability to be profitable, though. We're doing that every day. Okay. And again, big statement. I've said it for a year now, publicly, you know, saying these things. And there's no reason, even students that came to me and then left, who watch my stuff still, they also have no reason to try to protect me. You know, we just show up every day, every week, and the same stuff unfolds. Go look at the last 10 videos I've done on YouTube, the live calls. Go look at something I did 6 months ago. Watch the, you know, next 5 videos after the video I did 6 months ago, 5 months ago, 4 months ago, you know, and just watch them, you know, watch what happens, right? Watch the Sunday calls and then watch, you know, the live calls as a result. It's wild. It truly is. It's freaking wild. Okay. So again, I say all this to say, you know, there's light at the end of the tunnel. You don't got to worry about nothing. If you didn't take a trade setup, it is what it is. ICT was in shorts. Interesting. It shows you how independent thinking is so important. You know, there's many times where I catch him call something and I'm on the other side and I'm able to win. You know, obviously we're aligned more often than not. But again, you got to have that independent thinking. You know, I have a lot of students, like for example, today, Jen, right? She took the buy. I was waiting for a specific thing to happen, right? I was waiting for the retracement to rebalance, or the consolidation, manipulation, and the distribution rebalance. I wanted the rebalance. She ended up taking it right there, being an independent thinker. I said, I'm not going to take the trade. She believes in what she's doing because she's putting in the work. So her level of trust in herself is where it needs to be. And it's going to hopefully keep getting better and better and better. So even if I say something, if you trust your analysis, you stick to it. Just because I say something doesn't mean you change up what you're thinking, because you may be correct. I may be wrong. I'm not perfect. But we are right more than we're wrong most of the time. And if we are wrong, we know how to get back in line and determine why we were wrong. You know? So you got to have that level of independent thinking. See, Mike said I tried to short initially. Didn't feel right. They were holding firm. I bailed on the short and ate the loss, then reversed. Right, to mitigate the loss, then managed to trade on. Yeah, that's the process. When you take a loss, that doesn't mean that you're completely wrong or you're not going to be able to succeed in the day. Now, if you take 2 losses in a row, you got to have rules, right? You, of course, may take those 2 losses and you won't take a trade after, and then you'll be able to find the market, like where it's going to go, find where the market's going to go. That's going to happen a lot, especially early on, because you'll be maybe overzealous. You'll be not wanting to follow the process. You're not going to want to take your trade setup. You'll see the trade setup and you'll enter too early, and then it runs against you and you get stopped out. Like there's many variables in terms of profitability. That's why nobody can guarantee profitability. But even if you take a loss, that's why I have a rule, right? If I take a loss, I'm waiting 5 or 10 minutes just to make sure that I'm correct about what my initial assumption was, instead of going in, taking a loss, and then being upset, going in again, trying to force it, and then maybe just being simply wrong. And then something cleaner shows up later on that I now can't participate in because I have rules. So I have that little time in between trade setups. If I take one, unless it's like I made a stupid mistake and everything is just working properly, and I just maybe was a little bit early, I'll be able to then go in, depending on how close we are to the macro and whatnot and what the scenario is. But for the most part, if I take a loss, I'm waiting. I have a time stop. Oh my gosh, dude. Do we have another fucking spammer? Of course we do. These fucking people, dude. I'm literally gonna close my free group if this fucking shit doesn't stop. I literally can't stand these pieces of shit. Like, you guys are so pathetic. Who are these spammers? Why are you spamming? You're getting banned every time. So, like, I don't understand what, like, what? Like, oh, it's so annoying. Literally can't stand this shit. I've had 2 students that have gotten hurt by this type of bullshit because they're spamming phishing links. Whenever you see spam links, don't even associate. Block the people, because they're putting phishing links up for the most part. And then they're even going into small communities and trying to spam. Are you that desperate? Like, they're that desperate. It's nuts. So I can't stand them. Irritating motherfuckers. But yeah. So let me see. Here's another 1 shot, 1 kill. Nice. So DJ. Nice, DJ. Smacked it. Beautiful run there. Beautiful run there. Love it. Okay, that one was demo. First 1 shot, 1 kill. Yeah, the 1 shot, 1 kill is essentially what I used. My entry was right in that candle right there from the other day, the screenshot. So yeah, it's a beautiful model. If I, had to work the way that I used to, I would absolutely be using the 1 shot, 1 kill. Same stuff that I use already on the lower time frame, but I'd absolutely be using the 1 shot, 1 kill. What's funny too, like when I first started learning ICT's concepts, one of the first things that really stuck to me, that really made sense, that helped me gain clarity on navigating the weekly range, was his 1 shot, 1 kill excellence in short-term trading video. That was before I was, able to join his stuff. That was one of the first videos that really stuck to me and opened my eyes to what's really going on. I was like, wait a minute, like, okay, I'm going to take these elements that he just taught about the weekly range, and I'm going to go look and see every week. Let's see, is it showing up? And sure enough, all of the best buys come from below the open price on Sunday. The best shorts come from above. I mean, it's amazing. Your stop has to be obviously bigger, so your risk in terms of lot size needs to be smaller. You could obviously set up the framework and then refine on the lower time frames. Like, you could use the weekly power 3, weekly one shot, one kill framework, all the different components, and then go in and still trade on the lower time frames with the back end weekly power 3 as a context, right? So you can have clarity as far as what's happening. Very, very effective way to do things, by the way. So definitely consider that. But yeah, one shot, one kill is amazing. Oh, Nico took a trade too. Oh, that's unfortunate. Let me see. Oh yeah, he traded pre-market open. Yeah. Yes, this is a good example right here, you guys. Trading before the open. All you need to do is just wait till the open. Right? Wait till the open comes, let it do a flurry. We had a huge red folder news event at 5:30. Didn't have really much of a response except this right here. All right, and then 6:30 came, 9:30 Eastern. Drop lower. So this is a good example of one trade setup being taken and then taking a trade setup a little too early. Just a little too early, right? Give it that time, especially if it's ahead of 6:30. You don't want to exhaust both of your bullets pre-market open. You want to save it for later, at least one. You could take one in pre-market and then one in New York open, right? That first 30 minutes, remember, it's a lot of times a fake move anyway. Sometimes it's not. But this was a great move too, right? We talked about that. Talked about that for value gap. So, again, I'm pointing this out because it just goes back to what I said earlier about when you take a trade, give yourself some time because you may be wrong initially, right? And then a larger narrative may unfold, like this wick, beautiful closure above that midpoint. That's bullish, right? And then we have a rejection block, even more bullish. It just never really offered the rebalance up here. It just went accumulation, manipulation, distribution, and just distribution, right? Nonstop. Yeah, the 8:30 a.m. move down there, we actually call the trade setup right here to go higher, target these equal highs from early in the call. I think you showed up a little bit later. Didn't get to be here for that. But we definitely called this buy down here. Right inside that. This is a breaker here, this gray box right here. It's a 2-hour breaker, which is right there. So when price dove down into that, I was using that as a supportive PD array. And then once we started breaking up like this, going higher, not showing real respect to go lower, because we're anchored in the 2-hour, we're respecting the wick. Price ended up getting up above. This here also was a breaker. Go to the 1 minute chart. Wasn't the 1 minute right there. So I used that as the breaker. I called the buy in there, and then it delivered higher. I said if we were not comfortable in that with this framework, you could then wait till price gets above this wick. That wick with displacement creates a balanced price range. You can execute that. Seeing the failure to get up above this high, how intentional it was to set that as equal highs alongside that larger context of the buy side delivery being targeted, that became high probability in my mind. We continued to want to reach for that. There was an entry offered there for continuation, entry offered there for continuation. Once price gets above that, we got wick balanced price range, got the breaker. And then of course we talked about all of this that we talked about up to this point as well. Talked about that entry in there as continuation to blow this out. Talked about this as accumulation, manipulation, distribution. I wanted to get a rebalance. It never offered it. So I missed that. Jen caught it down here inside of the second stage distribution on the 15-second. Also simply accumulation, manipulation, distribution, right? But here's accumulation or consolidation, accumulation, smart money reversal, distribution. So what happened on the left side happens on the right side, and then acceleration, right? And again, if it would have simply offered a little bit of a move in there, I would have been able to execute that. but it didn't offer it, and I was not about to chase price. But that's some of the things that you may have missed. Any of you guys that have showed up a little bit late today. But yeah, so it is about to be 7:50. I think we'll call it here. We talked about a lot of things, outlined a lot of stuff today. Been pretty flawless in terms of what we wanted to see price do. Oh man, I'm definitely salty that I let that one go. I'm calling for this liquidity all week, but we've had a reasonable week. I think 5,000 plus. Well, with the other days, like 6,300 for the week. So really not that bad, right? Have nothing to really complain about. So gotta watch what I'm saying here. But I think we've done a lot this week. We'll be live again. Well, I'm gonna be live with my private group tomorrow. But I hope you guys have enjoyed this marathon this week. We did spectacular again, like we did last time on the marathon. Let me see. If I don't trade pre-market, is this a time when I can break this rule because it was so clean? Or do you recommend just stick to no trading pre-market? Well, it really depends, right? If you're just starting and you're just trying to get familiar with a particular moment in price, the pre-market open requires a little bit more experience because it's part of the daily manipulation. Like you're part of that manipulation phase many times going into that New York Open. So you got to be able to navigate liquidity or delivery to certain liquidity that may not be fully in line with the higher time frame narrative. You may get caught up in an opposite move, a counter trend move. So there's counter trend trading that's needed. There's really short term, like hourly intraday liquidity navigation that has to be understood. Obviously, if you sit there and spend time with it, you'll be able to nail it down. And sometimes pre-market open will start to deliver. But just look at the difference, right? This is after the open. This was before the open, right? I'm sure that a lot of people that were trading in here probably would have got thrown off by this. Of course, the higher time frame narrative is still important. We still spent a lot of time below the daily open price. So we still had a lot of stuff that could have been operated within. And then, of course, near-term liquidity, market maker buy models, hourly power threes. If you're going to trade pre-market open, you got to consider these things. You know what I mean? And the previous 3 hours from the moment you sit on the chart, the previous 3 hours highs and lows are going to be important. And anything that's in close proximity that looks like it could be touched, right? So you got to keep that perspective in mind. Know where we're at in the higher time frame, because you want to still look to try to trade in those directions. But there's an added risk in pre-market because, again, this is a U.S. asset. Now, if it was a London asset, it'd be a little bit different. But even London assets, in that little window going from London into New York crossover, sometimes can be an issue. Right? There's like a little space in time until we get to the New York Open where things slow down. It's like another lunch break, but for London. So sometimes it could be a little bit of a mess, right? Like 2 a.m. to 5 a.m., 2 a.m. to 5 a.m. That little window of time, a.m. Pacific Standard Time, can be a little bit tricky, right? And again, if you go into pre-market thinking market maker buy and sell models, where are we at? Power 3, right? Where are we at in terms of the last hour? Where's our last 3 hours of liquidity? And if you could determine where you're at within that mindset, it makes it a lot easier to be able to trade the pre-market open. But again, you're not in the main part of the narrative. The main part of the narrative in a U.S. asset is going to be in New York. And London sometimes starts the moves, but New York session is when the big boys come into the market. As you could see, the difference, right? Pre-market, it's a beautiful contrast. Pre-market delivery, New York session open, actual liquidity or delivery. So there's a huge difference many times. So you got to accept that. You got to be more nimble. You can't look for hundreds and hundreds of handles. It'll offer it to you sometimes, but you don't want to have that expectation. You got to be a scalper in pre-market open. And again, sometimes you'll get more, but you want to start the day very controlled, right? Start the pre-market open, that first 2 hours from 4 a.m. to 6 a.m. Well, 4 a.m. to 6:30 is pre-market, right? But specifically 4 a.m. to 6 a.m. Pacific Standard Time, that's your little window of pre-market open. In my opinion, that's got some opportunity. And we showcased navigating that this morning, right after 5:30. 5:30 is the bond market open, right? That's when the bond market starts trading. 6:30 is when the equities opens. So that's why 5:30 and 6:30 open price, they're significant. They're both references for Power 3 as well for the daily range, or at least the New York session. So yeah, I hope that makes sense. If you can trade New York, you have no reason to trade pre-market open. I wouldn't encourage it. There's no reason. At least for now. Maybe later on you'll want to, but you should have a hard rule of not taking a trade outside of the time window that you're trying to master. Right? Because every time period has its own quirky characteristics. Even pre-market open has its own characteristics. London has its own characteristics within the daily range. Asia has its own characteristics within the daily range. AM and PM session have their own characteristics within that New York session, which is again within the daily range. So they have their own role. And you got to understand each piece of the daily range. Same thing with the weekly range. You got to understand each day's role it has in the weekly delivery. Same thing with each week inside the monthly range. Each week has its own role within the monthly range. It's a fractal idea, right? So it's like little building blocks that lead into one another, or support one another, right? Yeah, no worries, Z. Appreciate the question. Obviously, over time things might change for you, but you want to narrow things down aggressively at first because you want to become a specialist. It's less to focus on and worry about too when you focus on certain things. Set my lockout at 9:30, so can only take a trade. I can only trade AM session. I'd rather catch the best move than risk money trading anything else. Yeah, I like that perspective, DJ. That's going to serve you well, brother. I'm telling you. It's forcing discipline. It's forcing you to have actual business hours that you're not going to break outside of until you feel comfortable with that initial business hours. You got to be a specialist. And later on, you could have multifaceted specialties. But yeah. So again, hopefully you all got value from today. I appreciate you guys hanging out. But yeah, so again, I hope you guys got good value this week. That just about does it for our marathon for this month. We'll be back again live here on YouTube on Sunday. I will keep you guys updated if there's anything I feel like I want to share in the free group, but those of you in my private group, as always, we're going to be live again doing what we always do, right? Bright and early tomorrow. Let me see what time it is. So we'll be live again. I don't know if any of you guys have like questions and whatnot. If you guys want me to get on earlier, just let me know. You guys know I'm up at 3 a.m. So just let me know. I'll be happy to send the link out. Could get into some lessons before the open comes out, before the news. Otherwise, I'll just send it out at 5 a.m. and we'll be up 30 minutes before the session starts, okay? But yeah, hopefully you guys got value. Let me know if you guys need anything. Don't forget to like the video, subscribe to the channel if you have gotten value and like what it is that we do here. It helps YouTube know that putting me in front of people that like to trade or need help is a worthy thing for them to do, right? It just helps the channel grow and shows me that I should keep doing this, you know? Yeah, no worries, DJ. I'll see you bright and early, brother. But yeah, so God bless you guys. Again, thanks for the love and support recently. Thank you for hanging out. I hope you got value. Don't do anything crazy today, right? Let's finish the week off strong. If you had a great day today, I would highly encourage you to basically finish the trading day or finish the trading week on a high note. If you hit your weekly goals, there's no reason for you to go in for more because you're being greedy. You know what I mean? Yeah, there's opportunity. Yeah, you could make more, but it's Friday. Friday is not better than Tuesday, Wednesday, Thursday. Friday is risky. Monday is risky unless you have experience to navigate it, right? And many times after large ranges happen, you could end up having a small range on Friday. You could have a TGIF reversal that happens on Friday. And if you're not familiar with that type of delivery, if you're not able to get over taking losses very easily, you might as well just sit and feel how it feels to end the week profitable, you know, because that's something you got to get used to as well. Yeah, no, tomorrow's Friday. Tomorrow's Friday. I'm saying end the week today. So don't trade tomorrow. Okay. So yeah, that being said, I'll see you guys next time here on YouTube on Sunday. And those of you in my private group, I'll see you guys bright and early, 5 o'clock for our Friday delivery. All right, take care, you guys.